Now we'll work out one comprehensive question with GST. Illustration 25, page number 18.45. So from the following balances, you have to do trading P&L and the balance sheet. Again, one trial balance is given to you, but it's not like previous question. They haven't written debit balances and credit balances. So you will have to go through each and every item. In previous question, it was easy because credit balances they had given. So for liabilities and all, you just had to look into credit balances. But here you have to go through each and every item. Then trial balance is given. Below that you have stock at the end, that is the closing stock, 37,500. Net realizable value, that is the market value, 35,000. Two figures are there for closing stock. Which one will you take? You have a rule, that is LMC, least of market or cost price, according to prudence or conservatism principle. So whichever is lesser, that is what you have to record for closing stock. So here the lesser value is 35,000. That's what we are going to record, both on credit side of trading and in the balance sheet asset side. So we'll start now. Give the heading, trading and profit and loss account. This is illustration number 25. For the year ended 31st March 2020. To opening stock 96,000. To purchases, just see whether you have less returns. Okay, did you see the question? In that question itself they have written purchases less returns. So you don't have to deduct anything. Purchases less returns you write and write the figure in the outer column. To purchases less returns 1,18,500. Then all direct expense you have to write. The first one given there is wages and salary. Did you see the first direct expense? Wages and salary both are direct expenses that we discussed in the first video. So wages and salaries amount is 32,000. Then we have freight inwards. Did you see that freight inwards amount is rupees 3,000. Even if the word inwards is not mentioned, if they simply give like freight, that is also inwards. Take it as direct. This is 3,000. There is one item on the top of that, that is commission on purchases. So commission on purchases means commission you paid when you purchased goods. So that is related to purchases or production. So it is direct expenses. Usually commission will be indirect. Here it is specified it as on purchases. So it is direct expense. You have to take it in trading. So to commission on purchases 2,000. Then next given there is purchases less return, sales returns, trade expenses. That also you have to remember. Trade expenses means it is related to your selling only. That is what you have to assume. It will come only in P&L. So trade expenses indirect. Whereas if they give like manufacturing expenses, it's related to manufacturing process. So manufacturing expenses are direct expenses, whereas trade expenses are indirect. Okay, it's just like salary, wages. Bills receivable, it's an asset. Rent, nothing is mentioned, so it's paid item and it is indirect in nature. Plant means it's asset. Bad debts means it's a loss which will be debited in P&L. Then we have input C, GST accounts. Similarly, at the end you have output accounts, output GST accounts. These two we have to set off. We know that input GST must be set off against output GST. So that we have to do, and the balance will appear either on the liabilities or on the asset side. Anyways, it will not appear in your trading and P&L. Then on the other side, repair, so it's indirect. Cash in hand and at bank together they have given. It's asset, debtors asset. Income tax is given. What is the nature of income tax? It is drawings. Tax paid on individuals' income. That means this is the amount paid on the income of income of owner. So that is called income tax. That also we have discussed in the chapter journal. For firm, we will refer it as corporate tax usually. So this is a kind of drawings. Other than that, drawings are given. We will add these two and write. Capital liability, bills payable liability, loan, nothing is mentioned, means it's bank loan which we are taking, it's a liability. Or loan advanced means which we are giving, it's an asset. This is a liability. The next item, discount on purchases. See, on purchases, when you see, don't write it as direct. Commission on purchases, yes, it is direct. Discount on purchases, see, when you purchased an item, you got a discount. That is called discount received, isn't it? When you sell an item, what you allow is called discount allowed. When you purchase an item, go to a shop, you purchase an item, you got a discount. That is discount received. So here discount on purchases means it's other term for discount received. Will you write it in trading account? No, discount received must be written on the credit side of P&L account. Understood? Don't make mistake there. Creditors again liability, then GST accounts we have, closing stock also we have. Okay, so now I think we finished all direct expense. We didn't find any direct expense. Now we can move on to the credit side. We can start with buy, sales, less returns. Sales less returns, the amount here is 2,49,000. By closing stock, the lesser value you have to take, that is 35,000. Then you find the balance. So where is the shortage? Shortage is on the debit side, 32,500. To gross profit, carry down 32,500. Write totals 2,84,000. Don't simply copy from the board, you do calculations yourself, so that automatically your calculation speed will increase. Now we will start P&L. With gross profit you can start, so take it to the opposite side. By gross profit brought down 32,500. It's the same figure you are writing. Then all indirect items we will take. Okay, again you start from the first item, opening stock, wages and salary. Okay, trade expenses we will write. $200. Then bills receivable, it's an asset. Rent we can take 2,000. Rent, nothing is mentioned, means it is rent paid, indirect expense. If it is factory rent, that they will specify. If it is factory rent, then you have to write it in trading. Bad debts we have to take here 5,000. Then GSTs will appear only in the balance sheet. Then repairs you have to write 1600. Cash in hand, income tax, bills payable, loan, discount on purchases, that is discount received, which should come on the credit side. $4,000. I think the items are over. Yes, repairs, everything we wrote. Yes. So now we can find the balance. See whether it is net profit or net loss. Here it is net profit 27,700. Shortage on the debit side again. So to net profit, transfer to capital account. $27,700. Then you write the totals. Write the totals and then you close this. I am not writing the totals. You compute the totals and then you write. Okay. Then balance sheet is there. So that also we have to prepare. They are asking you to do the balance sheet also. So give the heading balance sheet of, if you want you can write the owner's name or else it's fine. Balance sheet as at 31st. Actually in the format the name is there. Even if you don't write the name, the date is important. Date you have to write. Then draw the format. Liabilities amount, assets amount. So we are following, no, I am following the order of permanence. I think textbook, yes, for this question they have followed order of permanence. I will be following order of permanence always. But if you want you can follow order of liquidity. Capital, the figure given there is 50,000. With that we have to add net profit. Take it from your P&L. What is your net profit figure? 27,700. Less drawings. Drawings you have to add income tax also. That is 5,500 plus 6,500. You have to take drawings 12,000. Okay, that is 5,500 plus 6,500. This is less drawing, so less 12,000 within brackets. 65,700 in the outer column. Then we have a bank loan note, that is a non-current liability which you have to write here. The loan amount is 9,000. Then just go through the items once again. You have to pick out all liabilities now. Trade expense, bills receivable, rent, bad debts, GST, debtors, income tax, capital, bills payable is there. Bills payable we have to write. See whether creditors also there. Yes, creditors also given. So bills payable and creditors, these are the next items which we have to write. So you have to go through the items once again. $5,000 and creditors 23,300. Now on the asset side, fixed assets we'll write first. What all fixed assets we have? Plant we have for 20,000. See when I do, now I am not looking into the illustration, I am not looking into the solution actually, I am just reading all items once again. Same like that you have to do. You have to go through each and every item. First fixed asset given there is plant, then bad debts, GST, then debtors, that's current asset only. Then we don't have any other fixed asset. Okay, only that is there. Once you finished fixed asset section, the next what you have to write is the current asset. Start with closing stock always. Closing stock value is the lesser value 35,000. Okay, did I take 35,000 in the trading also? Yeah, it's the lesser value you have to take. Okay, closing stock. Then we can write all other current assets like debtors. How much is debtors? 40,000. Then bills receivable. Then we have that cash in hand and at bank. That is given together. Debtors figure given there is 40,000. Then bills receivable. We have for rupees 6,000. Cash in hand and cash at bank 2,000. Okay. Balance sheet items almost it's over. Now we have to consider that GST section. You have to always set off input GST with output GST. That setting off we have learned in that chapter GST, journal with GST. Just revise that before you work out the section. So, there is an order of setting off. We know that input CGST first must be set off against output. Same head you have to take, CGST itself. If that is not enough or if there is any balance, you can set off against output IGST. Similarly, input SGST first must be set off against output SGST, then finally against output IGST. IGST means Integrated Goods and Services Tax. Then input IGST first you have to set off against output IGST, the same head you have to take first, then against output CGST, finally against output SGST. Now we will see the figures given here. Input CGST 15,000 and output CGST 10,000. See, you can set off these two. Input CGST 15, output is 10. You can completely set off output against input. There is a balance of 5,000 in input CGST, isn't it? Balance will be 5,000 in input CGST. Similarly, input SGST 15, then output SGST also 10,000. So here also there would be a balance of 5,000 in input SGST. So now what we have is balance of 5,000 in input CGST and 5,000 in input SGST. Then what about input IGST? The amount given here is 5,000. In output IGST is 15,000. Okay, output IGST is 15,000. After setting off, after deducting these two, there will be a balance of 5 and 15. So, balance of 10,000 where? Balance of 10,000 in output IGST. Okay, so I will just write the final figures, that is we have a balance of 5,000 in input CGST, then balance of 5,000 input SGST and balance of 10,000 in output IGST. These are the balances which you have. Now, again input items are there, output also there. So, we have to set off again. Whenever you have input and output, you have to set it off. So, input CGST and input SGST is there, output IGST is also there. See, what's the format? First we took from output CGST, the same head. If that is not enough or if there is any balance, you can meet it from output IGST. So, now output IGST, there is a balance of 10,000 altogether, and input CGST and input SGST, you have balances of 5,000 each. Input CGST, input SGST, you have 5,000 each, isn't it? And we know that input CGST and input SGST can be set off from output IGST also. So this 5 plus 5 you can set off against that output IGST of rupees 10,000. Understood? These two can be set off against this output IGST of 10,000. Finally, there won't be any balance in GST, nothing to be shown inside the balance sheet. So actually your balance sheet will get over with this, nothing more you have to write. You just have to write the totals and close this balance sheet. Here you will be getting the totals as 1,03,000. Because GST accounts got cancelled automatically. Did you understand this section? You have to study that journal with GST portion once again, that setting off process. There is an order of setting off. So always you find the difference. Here input is 5, output is 10. So there is a difference of 5 and that balance will be there in, sorry not that, input of 15 and output of 10,000. So there would be a balance of 5,000 in input, because input is more, input value is more. Here also the same, whereas here input is 5, output is 15,000, isn't it? Yes, output is 15. So the difference is 10,000. That means balance would be there in output IGST. Then the balances we took. Finally we took all these balances together. We have balance in input CGST and input SGST. Then output IGST also we have a balance of 10. So these can be set off. These two inputs can be set off against output IGST. So finally there won't be any balance. But in certain questions, this is not in this question, in certain other question, you may get the same type, I mean with GST you will get, but there can be a balance in input CGST or input SGST and all. Here there is no balance, it got cancelled automatically. So we are not writing anything in the balance sheet. Suppose this was the question. We have input CGST for 5,000, output IGST for 10,000. That's the final figure which we got. We'll cancel these two. Finally, there would be a balance of 5,000 in output IGST, isn't it? If this is the case, this output IGST must be written on the liability side. Okay. So finally, if there is any balance in output GST account, in output GST, whatever be the account, whether it is IGST, CGST or SGST, if it is output GST, you have to write on the liability side. Because we know that output GST means it's payable to the government. That's liability for you, that we have discussed in that chapter. Whereas if you have a balance in input GST, whether it is CGST, SGST or IGST, balance in input GST must come on the asset side. Inputs are asset because that can be set off against output. So it's an asset always. Output is always a liability. So if you have a balance like this, it will appear in the balance sheet. But in this illustration, it got cancelled automatically. There was no balance to be written. So we didn't write anything. Okay. So with that, we'll wind up this chapter. Chapter is easy, very easy, but don't make any careless mistakes. Go through the formats and practice. Okay.